Okay, everyone, hope you're doing well. And today we are going to see CA Inter Audit RTP for the November 2021 exam, which has, of course, now been posted for 2021. So we are going to see the RTP that the ICA has released. But before that, I want to just tell you something which is very exciting on Unacademy. So my name is Professor CA Kartik Iyer, and I'm going to be guiding you in relation to this. Watch my next special class for free on Unacademy. The new features alert will now have the ability for you to raise your hand and ask your queries. Also, you can raise hand to voice chat with your educator, so you can speak on the phone, speak on the use your voice to talk to me during the live lecture just to discuss or ask any doubt. Voice chat with educators in a live class. Ask unlimited doubts at any time from anywhere and get instant and accurate solutions to your doubts. Okay. CA Intermediate Plus subscription, get 10% off. Use the code Yashas Live. Subscribe today. And CA Intermediate Iconic subscription, get 10% off. Use the code Yashas Live. Okay. Of course, you can subscribe. Okay. We have the CA Intermediate Notes and Scholarships. Target 2022 and 23 exams. Scholarship pool is worth 1 crore plus. 26 September 2021 at 12 p.m. Enroll now for free. So if you win this, you will get a chance to win a scholarship. It's basically called, you can see on the top, as Unacademy Combat, and there is a mega combat in which you can get a chance to win a scholarship, and your expenses in relation to your education will be taken care of. Okay. So my dear students, with that, let's start in relation to this session of the CA Inter RTP 2021 November examination. Let's look into that. Okay, now let's see this part. Now we are looking at the CA Inter Audit RTP for November, and now which has now been postponed to December 2021. Okay, so let's look at that. My name is Professor CA Kartik Iyer. I'm an expert in CA Inter and CA Final law and audit subject. Today we are going to see the RTP in relation to audit. Tomorrow we are going to see the RTP in relation to law. The RTP, I have designed the lecture in such a way that it is question and answer format, which makes it easier for you to go through the RTP. And of course, I'll be sharing some memorizing techniques in relation to few answers that you are able to understand and also get the matter done and dusted here itself in the session. Okay, so let's see. We have the first question, that is a multiple choice question based on case scenario. Okay, so there are two case scenarios. We are going to do the first case right now. So let's see. Miss Ria was among the promoters who set up a public company by the name Aksham Limited. The company appointed C.A. Rajendra as the auditor of Aksham Limited. C.A. Rajendra is the brother of one of the directors of Aksham Limited. After setting up of company, the company had a dispute with one customer of the company in the year 2019-20. They had some kind of a dispute. Who took the company to court? There are probable chances that the company will have to shell out rupees 50,000 as compensation, but the case will likely to be finalized in the year 2021-22. So it is something that is going to happen next year. Remember, we are in 1920 and this is going to happen in the next year. So you can see here 1920 and this is, or I should say after 2 years, that is 2021-22. So here they are saying C.A. Rajendra considers the fact that Aksham Limited has a present obligation and it's probable that an outflow of resources embodying economic benefits will be required to settle the obligation, and that a reasonable estimate, that is rupees 50 lakhs, can be made of the amount of the obligation. So here you can just do something in your mind. You'll be like, oh, I have seen this language somewhere. That is the definition of provision. Okay, now let's see this. Aksham Limited declared dividend of 10 rupees 10 per equity share on 10th April 2021. The financial statements were approved on 30th June 2021. Aksham Limited took loan of rupees 65 lakhs from Saksham Bank. So Aksham took the loan from Saksham Bank for a period of 10 years. The loan amount was guaranteed by Mr. Pramod, one of the directors of Aksham Limited. The loan was completely secured. So this loan was completely secured against the fixed assets of the company. So it is completely secured by the fixed assets, and also a guarantee has been given by one of the directors of the company, that is Mr. Pramod. Then they have given Aksham Limited drew designs of one of the products of the company, and this product constituted 90% of the sales of the company. The designs of the product were such that the sale of the company will increase every year for the next 5 years. Aksham Limited booked the designs of the company at a value of rupees 1 crore in the books of the company as intangibles at its cost. So as you know, designs can be what do you call intangibles, okay? Because you cannot actually feel it, or it is not something tangible, but it will give some kind of benefit in the years to come. So it is definitely an asset, and because it is in the nature of not being tangible, of course it becomes intangible in that. Okay. So now this is the case that they have given, and they have asked certain questions to us in relation to this. So let's see one by one. Let's see how it flows in a proper manner. Based on the above information, answer the following questions. First, state whether appointment of CA Rajendra is correct in law. That is the first question they have put. So now let's see the appointment of Rajendra. They have said here that the company appointed CA Rajendra. So analyze this. The company appointed CA Rajendra as the auditor of Aksham Limited. CA Rajendra is the brother of one of the directors of Aksham Limited. Now, if I take you back, there is a section, and we have done this in our crash course, and we'll be doing it in our main batch that is starting on 5th of October. That is under section 141, subsection 3, clause number F. Clause F. Why I remember F is because relative and family we are connected. So family is our relatives. 141 subsection 3, clause F. And this clause here says that. This clause here says that if the auditor's relative, if a person's relative is there in the company as a director, or is there in the company as an employee, and as an employee also they are there in the capacity as a director or a key managerial person, then I cannot be appointed as the auditor of such company. That is what this says. So if my brother, and this when they say brother, it is of course what they mean to say is a real brother, okay, and not cousin or someone. Okay, so real brother, that is brother of one of the directors of Aksham Limited, and CA Rajendra is the brother of the director. So can CA Rajendra be appointed as an auditor? The answer is definitely no. Okay, because of this section. That is what they have said here. Yes, it is whether the appointment of CA Rajendra is correct in law. And the options are yes, it is correct in law, then it is incorrect in law. As a relative of director is not allowed to be appointed as an auditor of the company. This seems to be the right answer. It is correct in law as per the Companies Act 2013 because brother is not covered under the definition of relative. Brother is covered in the definition of relative. Of course, we are making it clear that it is a real brother and not some cousin brother. Okay. Then it is correct as the appointment of auditor is not governed by any law in India. This is incorrect. Okay. Of course, appointment of auditor is governed under section 139 of the company. So here they have said option number B, and that is it is incorrect in appointment of auditor is covered under section 139. The eligibility qualification disqualification is covered under section 141. As I told you, so option number B here is the right answer. Okay. Next one, let's look at this one. Advise the company regarding the course of action Aksham Limited will have to follow for the court case for financial statements prepared for the year ending 31st March 2021. See, they had clearly mentioned in this case, they had clearly seen that it has a present obligation, and it is probable that an outflow of resources embodying economic benefits will be required to settle the obligation. That is a clear definition of provision. So, as per what we see here, the answer should be provision. We need to create a provision. Okay. So the options are create a provision, create revenue reserve, doesn't make sense. Create capital reserve, again doesn't make sense. And to be disclosed as contingent liability could be possible, but here it is probable. It is probable. So probable means we have to create a provision. That is option number A. Okay, so I hope it is very, very simple, very easy for you to understand. Next is what is the action which Aksham Limited is supposed to take with regard to treatment of dividend declared while preparing and finalizing financial statements for the year ending 31st March 2021. Now, in relation to dividend, what they have said in this case study is, let's see this. Aksham Limited declared a dividend of rupees 10 per equity share on the 10th of April 2021. The financial statements are approved on 30th June 2020. That is what they have said. So it simply means that we need to just disclose the dividend, that we have to just say that, okay, we have declared this dividend. So the simple disclosure is required. Let's see what the options are. Dividends as liability. Disclose the dividend. Dividend as liability will be when dividend is still unpaid, correct? But here the answer will be disclose the amount of dividend. Both A and B and none of the above, no, the answer will be B. So the answer B is the right answer. Great. Okay. See, the disclosure of Aksham Limited is required to make with respect to the long-term borrowings taken from Saksham Bank. So in this case, they have said that if you have taken a borrowing from Saksham Bank, secured loan from Saksham Bank is there, then fixed assets are secured against the loan. So that is, of course, it has happened. We have taken a secured loan. We have also secured them, secured the loan by creating a charge on our fixed assets. Then the loan of rupees 65 lakhs is guaranteed by director. That is also true. And finally, repayment terms of the loan, which is of course required in relation to loan transactions. So they have asked, state the disclosure. What disclosure you have to give? We have to give all four of them. So that is option number A here needs to be the right answer. That is 1, 2, 3, and 4. Okay, that you can see here. Option number A here is the right answer. Okay, very simple, very easy, simple, very easy way of going about it. Next is state whether state which of the following statement is and respect to recording an intangible in the books of the company. Now they have told about intangible and that designs which are made, which are going to give the benefit for the next 5 years. So here we have to see regarding the intangible part. Let's see this. Intangible is correctly booked by the company. Okay, it seems to be right. Intangible is wrongly booked. There only we will not believe it because they have said here wrongly booked as per accounting standard. No, wrongly booked again incorrect. It is rightly booked. So as per the auditing standards of India, and wrongly booked as per Companies Act. No, these three seem to be the wrong answer, and this seems to be the right answer because it is an intangible which is going to give us benefits for a period of 5 years. So the statement, the treatment that the company has done seems to be the right treatment. Okay, that is your option number 5. Okay. Case scenario 2. So they have given 5 MCQs for one case, and now I think there will be 5 more MCQs for another case study. Let's see this. Best Tea House is a cooperative society formed as per the provisions of the Cooperative Societies Act 1912. It runs a chain of restaurants serving mainly tea and snacks in Delhi. RAS and Associates, chartered accountant firm, has been appointed to conduct the statutory audit of the society. None of the partners of the firm, CAR, CAA, CAS, have ever conducted a cooperative society audit before and so familiarize themselves with the provisions of a particular act governing the society before starting the audit. So they are not aware of how to do the audit of a cooperative society. Before the audit, Best Tea House informs the auditor that they have been in operation for the last 5 years and no audit was required earlier since their turnover had not exceeded the prescribed limit. As you know, there is a prescribed limit given. While examining the books of accounts of Best Steel House, RAS and Associates, noticed that, as stated under Section 43H of the Central Act, certain rules are framed prescribing the books and accounts to be kept by Best. Okay. So it is also understand that according to Section number 5 of the Central Act, in the case of a society where the liability of a member of the society is limited, no member of a society other than a registered society can hold such portion of the share capital of the society as would exceed a maximum of a certain percentage of the total number of shares or of the value of shareholding to a specified amount. RAS and Associates were concerned with this provision so as to watch any breach relating to the holding of shares. So you may have to tell about this part. They may ask you in the MCQ. While examining the loans of Best Tea House, the auditors noticed that the society has given a loan to a relative named Mr. P of a member of the society, Mr. T, of an amount not exceeding 1,000 rupees. A loan has been given here, okay, to a relative of the member, that is Mr. T is the member, and we have given the the loan to a relative, that is P. Then they have said here, RAS and Associates examined the overdue debts and checked its classification, which they are required to report. During the audit, RAS and Associates noticed few transactions for personal profiteering by members of the management committee, which are ultimately detrimental to the interest of the society. RAS and Associates report this matter to the required authority, take necessary action. After the conclusion of the audit, in addition to the audit certificate in the prescribed form and various schedules, RAS and Associates are also answered 2 sets of questionnaires called as audit memos. The auditors also submitted the audit report in the narrative form addressed to the chairman of the society, which was divided into 2 parts style, part 1 and part 2. This is the mandatory requirement, okay, in relation to filing the audit report of a cooperative society. Here they have given few questions. Let's see each one. I said here, based on the above information, answer the following question. First one is, according to section number 5 of the Central Act, which is maximum percentage of total number of shares and what is the maximum value of shareholding that RAS and Associates were concerned with? so as to watch any breach relating to holding of shares. Now, section 5, you have 25%, which is not correct. Okay, so you can just forget about it here only. 20% seems to be right of the total number of shares. Value of shareholding up to 5,000 is incorrect. So 5,000 in this case is incorrect. 25% again incorrect. And then you have the fourth one, that 20% of the total number of shares seems to be right. Or of the value of shareholding up to rupees, yes, 1,000. So, but D here seems to be the right answer. Okay, that is your option number D. For section 29 of the Central Act, Best Tea House cannot give a loan to any person other than, so they cannot give a loan to which person here? They've said here a member and with a special sanction of the registrar, relatives of the member not exceeding the amount of rupees 1,000. Then they've said a member and with a special sanction of the registrar, another registered society, a member and with a special sanction of the registrar, relatives of the member, and finally a member and with a special sanction of the registrar, another registered society not exceeding rupees 1,000. In this case, the option number is B. That is a member and with a special sanction of the registrar, another registered society. So you can give a loan to a member and with a special sanction of the registrar, you can give to another registered society. But in no case, you can give it to the relative of the member. Okay, very, very clearly they have mentioned. Okay, Santosh is here. Santosh, which C point are you talking about? Can you please tell me the question number? I will explain to you, but can you please tell me which C point you're talking about? Santosh, can you please mention it so that then I can help you out with it? Okay, maybe I've lost you in the chat area. Okay, now let's see this. Overdue debts for a period from dash to dash and more than dash were classified and reported by RAS and associates. Okay, that is in relation to overdue debts. Now, overdue debts have to be classified for 6 months to 5 years and more than 5 years. We have to just look for that, and that is this 6 months to 5 years and more than 5 years. That is option number C. Okay, as you know, there are some special considerations that we have to do during the audit of corporate society, and in that, one of the first points is the overdue debts. We have overdue debts, overdue interest, and so on. There are several points here. Okay, next we'll see to whom does RAS and associates report the transactions during audit. So whatever transactions are wrongful in our mind, in the mind of the auditor, that there are personal profiteering is done, where the senior management of the corporate society is, it seems that they are cheating their own members. It seems that way. Then we have to raise the matter before the registrar of corporate society. That is option number A. Okay, so that is option number A in this case. Okay, I hope it is helpful to you. Next is mistakes having an impact on the profitability of society were pointed out by RAS and associates, as it had a consequential effect on the financial position of society. In which of the following submissions was this information required included? So this information is included in, you have these areas. Even though it was part of the audit memos, we'll specifically say it is part 2 of the audit report. You have to give it in part 2 of the audit report. Okay, that's point number 5. That is just MCQ number 5, and that is where the MCQs in relation to that case study here end. Okay. Now we are entering the general MCQs. These are in relation to the various chapters that you have in your portion. So let's see one by one. To jointly audit books of accounts of WZ Limited for the financial year 2021, two different firms of chartered accountants, namely MH and Associates and NR and Associates, were appointed. MH and Associates and NR and Associates can together be called as, what can they be called as? They can be called as, of course, joint auditors. Okay, joint auditors. They've been appointed separately. Two different firms are there. Okay, so joint auditors. Like they have said here, Mr. H and his team members carefully was the whole process of counting of finished wooden doors by employees of bottom limit. This is an example of which of the audit procedure. So they have given here, this is an example of which audit procedure. Simple answer here will be, it is an example in relation to observation. So they have carefully watched, no? That gives us you an indication that this is your, observation. Okay. I hope it is very, very simple, very, very easy. Next is under section 43, clause H of the Central Act, who can frame rules prescribing the books and accounts to be kept by a cooperative society? Okay, that is the question here. They have said here that, very sorry for that. So who can frame the rules prescribing the books? The answer is the state government in this case. The state government can help, has been given the power under the Central Act to frame the rules, having the books and accounts to be kept by a cooperative society. Next, dash is the threat which occurs when the auditors are deterred, means somehow warned or stopped from acting objectively with an adequate degree of professional skepticism. So that is when is the auditor stopped from doing something right. So when the auditor is intimidated, it's a threat. The threat, correct? So you have the threat. We learn this by remembering SAIF, Saif Ali Khan. We remember. So remember something called a safe threat. Okay, that is self-interest threat, self-review threat. Then you have self-review threat here. Then you have advocacy threat, intimidation threat, and familiarity threat. That is the code that we use for it. In this case, because the auditor is deterred, it means he is not allowed to do that activity. Then we call it as intimidation threat. Called as intimidation. Okay, very very simple, very easy. Okay. Next one is the person with responsibility of overseeing the strategic decision of the entity and obligations relating to the accountability of the entity are these are called as those charged with governance. Okay, those charged with governance. Okay, please give me a second. Okay, I'm having bad cold today. Just please. Okay, now let's see this. So that is TCWG, that is those charged with governance. Okay, so let's see this. That is B for B, those charged with governance. I hope it is very, very easy. Next, you have the descriptive question. Okay, now let's see this one by one. State with reasons, in short, whether the following statements are true or false. Okay, that is the question in this. So here you have to objectively, find whether it is true or false and see whether the sentence makes sense or not. And you have to see in a very proper manner, and then you have to give a one-line reply whether it is true, why it is true, and why it is false. Let's see this. One of the objectives of written representation is to support other audit evidence relevant to the financial state. Correct. Written representation by itself cannot be an audit evidence. It cannot act as a substitute to the normal audit evidence that the auditor does. But written representation, can it be what do you call? Can it support other audit evidences? The answer is yes. Okay. So the answer in this case should be correct. One of the objectives of written representation is to support other audit evidence relevant to the financial statements or specific assertions in the financial statements by means of written representation. Written representations cannot be a substitute. See, they are clearly given here. It cannot be a substitute for the other evidence that the auditor could expect to be reasonably available, to be reasonably. That is in relation to written. Okay. Next is they have said here, computer software, which is an integral part of the related hardware, should be treated as fixed asset or tangible asset. Now they've spoken here about computer software. Now computer software, you think about it, it has all the features of an intangible asset. If I tell you, the computer software is of course there in a pen drive or in a CD, or it is there, or you can download it from online. But however, you cannot feel it, touch it. It does not have the property of tangible assets. But you have to ask one question here, and that is, can the computer software work without the computer hardware? And because it cannot work without the computer hardware, so it is essential that the computer hardware is required for the functioning of the computer. And hence, this statement also is a correct statement because computer software, because it cannot function by itself, and because it requires the hardware along with it, it will be called as a fixed asset or a tangible asset. That is correct as per AS 26 of the intangible assets. Computer software of for a computer controlled machine tool that cannot operate without that specific software is an integral part of the related hardware, and it is treated as a fixed asset. Therefore, computer software, which is the integral part of the related hardware, should be treated as fixed asset or intangible asset. Okay, that is what they have said here. The auditor appointed under section 139 may be removed from his office before the expiry of his term by board resolution only. Now, this statement, when they give such a statement, you have to understand very carefully. Whenever they give the statement only, sometimes you can get confused. Oh, I think it is false only, because how can it be only? There can be other conditions also. So the statement, of course, in this case is incorrect. Incorrect. As you know, section 140 subsection 1, in this case we see that the auditor appointed section 139 may be removed from his office before the expiry of his term by first of all, we have to pass the steps are this way. We have to pass a board resolution, and you have to make an application to the central government in form ADT2 along with the fees. It has to be done within 30 days of the board of directors decision. After that, we'll wait for the central government's approval. After central government gives its approval, we'll then hold an EGM, and in the EGM we have to pass a special resolution. Now this EGM has to be held within 60 days from the date of the approval of the central government. So in this case, only the board resolution approval will not suffice. We need the board resolution, we need CG approval, and then we need the special resolution from the member. Only if these three conditions are satisfied, only then the auditor can be okay under section 140 subsection 1. So here they have said before the expiry of his term, only by a special resolution of the company after obtaining the previous approval of the central government, and before even passing the approval of central government, we need to pass a board resolution first. So three conditions: board resolution, CG approval, and special resolution by the shareholders. And the previous approval of CG can be taken as per Rule 7 of the company's audit and auditors rules. Okay, very simple. Next is the matter of difficulty, time, or cost involved is in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. Now they have said that, see, the matter of difficulty, time, and cost, this is what the auditor will think, and then he will maybe skip a audit procedure. He'll say, no, no, let me not do this. So is it true? The answer definitely is incorrect. It is not. Okay. Just because of difficulty, time, and cost, the auditor doesn't skip it. Even though if it's difficult, the auditor may still do it. If it is timely, still the auditor. If it is time consuming, the auditor may still do it. Even if it involves a cost, the auditor may still do it. But the auditor here find a balance between the relevance of that evidence and the cost involved along with that evidence. Once that what do you call that matching is done, if let's say it is a very relevant evidence, it is something that is very important that can help the auditor reach the sufficient appropriate audit evidence and thereby reach the reasonable assurance level, the auditor can go for that evidence even if it is costly, but it should not be that the cost in relation to which the cost incurred for finding that evidence is more costly than the evidence itself. Okay, so the more it is, the cost of traveling or hotel stay where the auditor will go, maybe near the go down, check something, that should not be more costlier than the evidence itself. Okay, then it doesn't make sense. So the point here is incorrect. So they have said here the matter of difficulty, time, or cost involved is not in itself a valid basis. They have said here is not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. Appropriate planning assists in making sufficient time and resources. The auditor should plan well, available for the conduct of the audit. Notwithstanding this, the relevance of information and thereby its value tends to diminish over time. It tends to go down over time. Therefore, a balance has to be struck between the reliability of the information and its cost. Reliability and the cost. What kind of evidence are you going to get from that information? What kind of cost you are going to incur? And then you have to do there's something called as cost benefit analysis. That is what the auditor has to do. Correct? The auditor must include in audit documentation superseded drafts of working papers and financial statements, notes that reflect incomplete or preliminary thinking. So they are given such a question. So now we have to see whether the auditor has to should he include? They have used the word must. It is the auditor must include. So should the auditor include superseded drafts of the working papers, that drafts document? Then you have financial statements, note that reflect incomplete or preliminary thinking of the auditor. So the auditor compulsorily include these areas? The answer is definitely no. Okay. So they have said here incorrect. The auditor need not include. So the auditor need not include. It's not compulsory for him to include. In audit documentation, superseded drafts of working papers, financial statements. Then you have notes that reflect incomplete or preliminary thinking. Previous copy of documents corrected for typographical or other errors and duplicate of documents. So it is not necessary for the auditor to include in his working paper if he wants to, but he must not. That is definitely not there. He must do this. He must have these documents. That definitely not there. They have said here he need not include. Okay, very simple, very easy. Next, they have said here the auditor assesses a risk of material misstatement regarding litigation and claims that have been identified. The auditor need not seek direct communication with the entity's external legal counsel. Now here they have said, now this is directly in relation to SA 501, correct? Now here they have said the auditor assesses the risk of material misstatement. It means it is not the identification of litigation and claims. It is in relation to He has already identified the litigation claims, and now there is a risk of material mistake. Okay. If you remember that that part of the standard in relation to litigation claims, it has two parts. First, where the auditor identifies whether litigation claims are there. Second, where the auditor, if he finds the risk of material misstatement, then some actions he'll take. In that, one of the important point is the auditor can approach and can have a direct communication with the entity's external legal counsel. Here they have said the auditor need not see. So the statement automatically becomes incorrect. Okay, so let's see this. Incorrect if the auditor assesses a risk of material misstatement regarding litigation or claims that have been identified, or when audit procedures performed indicate that other material litigation or claims may exist, the auditor shall, in addition to the procedures required by other essays, seek direct communication with the entity's external legal counsel. Seek direct communication with the entity's external legal. The auditor can then seek a direct communication. Very simple, very easy. Okay. Next, I've said collateral security refers to the security offered by the borrower for bank finance, or the one against which credit has been extended by the bank. This security is principal security for an advance. So they are saying here that collateral security, they have said, and this is a very important line. This security is a principal security. Is it the principal security? The answer is no. There is first something called as primary security, and over and above that, you have something called as collateral security. This statement also becomes incorrect. So the explanation goes like this: incorrect. Primary security refers to the security offered by the borrower for bank finance, or the one against which credit has been extended by the bank. This security is the principal security for an advance, the main security. Collateral security is an additional security. You can see here additional security. Security can be in any form, that is tangible or intangible asset, movable or immovable asset. Okay. So collateral security is not the principal security or not the primary security. There's something called a primary security first, and after that only you have collateral security. Okay. The first auditor or auditors of the multi-state cooperative society shall be appointed by the board within 1 month of the date of registration of society. The answer is correct. Now, the appointment of the first auditor in the case of a company and multi-state cooperative society are somewhat similar. Okay. There, in the case of the company, which is other than a government company I'm talking about, there the board of directors will appoint the first auditor within 30 days from the date of the incorporation of the company. In this case, they have said that the first auditor in the case of multi-state cooperative society shall be appointed by the board within 1 month. So there it is within 30 days, here it is within 1 month of the date of the registration. Very close, very similar, okay? But remember, there is difference, of course, between 30 days and within 1 month. There is difference, especially when the month involved is February or a month involved having 31 days. And then the difference will come. And then they said here, in this case, as the board fails to exercise its powers under this subsection, the multi-state cooperative society in the general meeting may appoint the first auditor or auditors. That is, then the shareholders, then the members will take the matter in their own hands, and then they will appoint the auditors of the first auditors of the multi-state cooperative society. Very clear, very simple. Okay, that is in relation. Next is your nature, objective, and scope. Okay, let's look at this area. Here they have said, now we are going to go chapter-wise question and answers. Okay, let's see this. Question number 2A. The knowledge of human behavior is indeed very essential for an auditor, so as to effectively discharge his duty. And they have written here. Okay. Now, as you know, there is an entire answer in relation to the relationship of auditing with other disciplines. Okay. So in that we see basically the relationship of auditing with maths and statistics. Then you have accounting, law, economics. You have these areas. Then you have behavioral science, production, processing. So you have all these areas. So there is one more area that is in relation to psychology, that is behavioral science. Okay. Now they have said here the knowledge of human behavior is indeed very essential for an auditor, so as to effectively discharge his duty. The auditor has to speak to different persons at the client's place. He has to gather he has to handle his own team members. He has with the, let's say, the principal, that is the partner of the audit firm, is not in charge. Then the manager, who is a chartered accountant, hopefully a chartered accountant, will take the lead in the audit work. And now that manager will now see to it that things are going on in a proper manner. So he has to listen to his boss, that is a partner. He has to deal with the client. He has to deal with interns. He has to deal with the other members in the organization, and he has to ensure that there is peace around and the work is going on. He has to also ensure that he is getting the work done by different people. So, of course, you need to have a very good grip on the human behavior side, and you should know how each one is behaving, how each one is reacting. Let's see this excellent answer. This is the field of auditing as a discipline involves a review of various assertions. Whenever you see assertions in audit, always remember it is about transactions, account balance, disclosures. So review of various transactions, account balance, and disclosure. Okay, both in financial as well as the non-financial terms, with a view to prove the veracity of such assertions and expression of opinion by auditor on the same. Thus, it is quite logical and natural that the function of audit can be performed if and only if the person also possesses a good knowledge about the fields in respect of which he is conducting such a review. The discipline of behavioral science is closely linked to the subject of auditing. While it may be said that an auditor, particularly the financial auditor, deals basically with figures contained in the financial statements, but he shall be required to interact. See, he shall be required to interact with a lot of people in the organization. As against the financial auditor, the internal auditor or the management auditor, they expect to deal with human beings rather than financial. One of the basic elements in designing the internal control system is personnel. However, if a sound internal control structure is designed, it cannot work until and unless the people who are working in the organization are competent and honest. For example, the company makes a policy, correct? Now, how successful is the policy depends on the employees of the company, correct? And employees are what? They are humans. So you have to tell them about these policies in a proper manner, tell them the benefits of the policy. For example, let's say the company's timing earlier was they had fixed a time for the company, let's say 10 to 6, and the company has now changed the time into 9 to 6. Now, of course, there will be some disgruntled employees. They're like, what is this? They have increased 1 hour of work now. What will we do? And we are hating this part. They will tell them that see, this is just for the 2 months. We are implementing something which is called an automated system. And for the morning first hour, we want you to get trained in this. Only if the 2 months training is completed, then you will find greater benefit. And later on, we may make the timing 11 to 6. So you please come for 2 months for just 1 hour every day before. And after that, your timing we can make it 11 to 6 because um, the automate system will be able to help you to get your work done fast. So when you tell the employees from their benefit perspective, okay, then they will listen to you. So that is the tact that this is the similar tact that the auditor also requires when he is dealing with the client. Here they have said it cannot work. However, if a sound internal control structure is designed, it cannot work until and unless people who are working in the organization are competent and honest. Okay, the knowledge of human behavior is indeed very essential for an auditor so as to effectively discharge his duty, effectively discharge or get his work done. Okay, that is what they have said here. Next is discuss a few guiding principles which are behind safeguard to eliminate threats to auditors' independence. Okay. Now, this is one of the answers in relation to the ethical requirements. Okay. So you have something called as SA 220, correct? And inside SA 220, you have something called as the elements of system of quality control, which is nothing but, if I tell you the points quickly, it is nothing but your leadership responsibilities. Then you have ethical requirements. Then you have acceptance and continuance of client relationship. And after that, you have human resources and just a second, human resources. And then after that, you have engagement, performance, and finally, you have monitoring. Okay. We do this with you can use this code also, it is fine, but we use a story so that you are able to remember it in a proper manner. Now, in this case, what we are seeing here is that we are looking at the few guiding principles that which are behind safeguards to eliminate threats, safeguards to eliminate, okay, to the auditor's independence. Now, in this case, what we are seeing is that what should the auditor ensure so that his independence is not questioned. This is straight in the category of ethical requirements. Okay, so in ethical requirements, you have principles of ethics, okay, that the auditor should follow. After that, you have threats to independence, and then you have safeguards against those threats. Okay, now let's see the answer. The chartered accountant has the responsibility to remain independent by taking into account the context in which they practice, the threats to independence, and the safeguard available to eliminate the threat. The following are the guiding principles in this regard. Let's see each one. Now, here there is a small tune that you have to sing. Okay, the tune is con key, concrete. Then you have to sing this. Desist from the task or put in place safeguard. It's a tune. So how do you say it? You will say it like this: concrete. Desist from the task or put in place safeguards. Once again, concrete. Desist from the task or put in place safeguards. Once again, concrete. This is from the task or put in place safeguards. This is how it flows. Okay. Let's see this. The following are the guiding principles in this regard. They have said each one. For the public to have confidence in the quality of audit, it is essential that auditor should always be and appears to be independent of the entities that they are auditing. The auditor should always seem to be having an independent approach. It should always maintain distance, as we say with the accounting team. That is, then only the public will have confidence in the quality of audit. In the case of audit, the key fundamental principles are integrity, that is, the auditor should be very firm about his principles. Objectivity, the auditor should have no bias nature. Professional skepticism, the auditor should have a questioning mind, which necessarily requires the auditor to be independent. Okay, so con key, and you have concrete. That is, before taking on any work, the auditor must consciously consider. Auditor should think that am I doing something right by taking up this audit? Will it be correct or incorrect? That is, must consciously consider whether it involves threats to independence. Next, I said, if the auditor is unable to fully implement credible and adequate safeguards, then he must not accept the work. He must then not accept the work. Okay. Finally, I've said here, when such threat exists, the auditor should either desist from the task or put in place safeguards. Desist from the task or put in safeguards that eliminate. Very easy. So concrete. Desist from the task or put in safeguards. In this way, it will. Okay. Next, let's see. That is question number 3A. The firm should establish policies and procedures designed to provide it with reasonable assurance that it has sufficient personnel with the capabilities, competence, and commitment to ethical principles. Discuss the personal issues addressed by such policies and procedures. Also explain how addressing the personal issues would empower the firm. So this is basically how will the auditor ensure that the personnel of the firm, this comes under the category of human resources, how uh, the personnel in the firm, they are made more, what you call, uh, they feel more relaxed, feel more with the organization. So what kind of policies, what kind of areas should be covered in the policy and procedure? That is this answer. Okay, very simple answer. I'll explain in very like quick technique form so that you understand it. Let's see the intro of this part. The firm should establish policies and procedure designed to provide it with reasonable assurance that it has sufficient personnel with the capabilities, competence, and commitment to ethical principles necessary to perform its engagements in accordance with the professional standards and regulatory and legal requirements, and to enable the firm of or engagement partners to issue reports that are appropriate in the circle. Such policies and procedures address the following personal issues. So they have given some areas. Just think about a person, okay? Now, a person who has come into the job, we will first assure that that person has capability and that person has competence. Should have capability and competence. This should be there. Only after that, we'll ask him to, come for the interview. And, we'll then, take his interview. That in when we are taking his interview, we'll ask him questions. When we're asking him questions, we'll ask him what kind of salary is he expecting. And that is estimation of personal needs. What is he expecting as a salary? Okay. Now let's say that person says I'm expecting 50,000 as salary. Okay, he says 50,000. And I need it because I'm the sole earning member of the family. My family members have stopped earning because of some family reason. So I'm the sole member. We tell him that because of your, qualification and everything, instead of 50,000, we will like to offer you 60,000. Would you accept it? So that person has a nice smile on his face. He's like, okay, for sure, of course. So now, the company just made him happy. So he's very motivated, he's very motivated to work very hard. Now this person is, then he joins the organization and he tells that, okay, now I'm going to go full-fledged in this organization. You can say that he is now recruited. What the company does is now the company will ensure that he is paid the compensation properly on time. So we will pay him the required compensation every time properly. We'll give him the compensation at every month. So what happens is company will pay him the salary every month, and of course the company will keep a careful eye on the performance evaluation. How is he working? When we did his evaluation, that person came out to be an excellent employee. So we offered him a promotion, which he readily accepted. And we asked him, where do you see yourself in the future? He said that, sir, I want to be one of the top persons in the company who is helping the company going forward. So he has already kept his eye on his career development. Okay, so that is how this answer flows. You can again play this answer. You can, because it is on YouTube, you can again just go behind, was this story once again, and you can just quickly revise it. Okay. Today I am pressed for time because I have to complete this in around 90 minutes. That is 1.5 hours. So I have to ensure that everything is very crisp. So if you want to rewatch any story, you can just go behind and listen to it, and your answer will be done. Okay. Let's see this. Addressing these issues enables the firm to ascertain the number and characteristics of the individuals required for the firm's engagement. The firm's recruitment processes include procedures that help the firm select individuals of integrity as well as capacity to develop capabilities and competence necessary to perform the firm's work. Okay. Next answer is there are practical and legal limitations on the auditor's ability to obtain audit evidence. Explain giving. Okay. Now here they have said that see there are some limitations in audit, there are some practical and legal difficulties. So they have just asked us to give some example knowledge. Let's see this. First is it is possible that management may not provide complete information to the auditor. Now there is a grave concern. It's an important concern. The reason being that it means that the management either has not kept proper system of controls in place from which the auditor can look at the information, or the auditor or the management simply does not want to share it because of fraud. Okay, so you can clearly see here that it can be because of management's inefficiency or management's fraudulent mindset. So that is what will concern the auditor. So that is one of the practical and legal limitations. Second, they have said auditor may the fraud may involve sophisticated and carefully organized. What do you understand by careful, sophisticated and carefully organized schemes? See, whenever fraud is done, the person who is doing fraud, he is not of the opinion that he wants to ensure that he is not caught. Okay, he wants to ensure that he is not caught. Correct. So he will ensure that he is doing his right planning. He is ensuring that things are properly there in place, and he will not leave anything to chance. Correct. That is sophisticated and carefully organized schemes. He will go to a very high level of planning. Will design in such a way that he doesn't get caught. Even if he gets caught, there will be some other way around it, from which he can escape. Some or the other things will be there. So it is very difficult for the auditor to catch such frauds. Next is the audit. An audit is not an official investigation. The auditor doesn't come with the mindset that I am going to find a fraud. Come with that mindset. Auditor's primary goal is to obtain audit evidence so as to reach reasonable assurance and and also to report as per the standards on audit. That is what the standard says. Right? SA 200 talks about the overall objectives of the independent audit. So investigating the matter or finding fraud is not what the auditor is appointed, of course. But during during the audit work, if he finds any suspicious aspect, he may look into the matter. Okay, so that is what they have said here. So that is an audit is not an official. Very simple, very easy. So this is with some examples. Next is chapter number 2, that is audit strategy, audit planning, and audit program. So let's do this. Here they have said the nature, timing, and extent of the direction and supervision of engagement team members and review of their work vary depending on many factors. Explain these factors. Okay. So simple. Whenever you are a boss, or let's say you are conducting the audit work, and from your uh, interns, or let's say people who are working under you, okay, your subordinates, you have to get work done from them. Now that depends on various aspects how you will get the work done. For example, how much. For example, a simple example I'll give you. If the child is a very naughty child, okay, that child is a person who is runs here and there and troubles people and all these things. A small child. The mother will have to take good care of the child, especially when they go to public places. Okay, let's say the family sitting in a theater, the child should not make unnecessary noise, but he may do so because of naughtiness. So the mother and the father will ensure that the child is in control in public places. The child, he or she is not running here and there. The naughtiness should not be there. So they will keep that in control. So the direction and supervision for such a child is to be required is more. Right? Imagine a child who is very shy, okay, doesn't speak that much, is very quiet, sits properly, and whatever you tell the child does. A very good child. So in that case, the parents don't have to worry about that child too much because the direction and supervision that they have to give not that much because the child is has that inbuilt self-discipline. Now you understand this and you keep this in mind that we are talking about the factors. See the factors. Depending on which we will give direction and supervision. This answer is about that. Now let's look into this answer. See, capability and competence of individual members. Okay, we will see the capability and competence of individual team members. The team members are capable and competent. They are capable and competent. Then basically the auditor here will not what do you call the principal auditor will not run behind them, not train them or tell them again and again. But if their capability and competence is not there, then of course you have to train them properly. So that will require more direction and supervision. Next is risk of material misstatement if it is high. If the risk of material misstatement is high, then of course you have to give more direction supervision. If the area of audit is such that it is, for example, it is bank audit. So if it is bank audit, and if the subordinates don't have any knowledge about it, then you have to give them direction supervision. Finally, the size and the complexity of the entity is such that we have to treat. Size and complexity means that let's say there are a lot of branches, foreign branches are there. There are interfirm transactions. Okay, there are intercontinental transactions, intercountry transactions. All these are there. It becomes more complex. Okay. So here the code that you can use is a very simple code that is crazy. Okay, you can use the code word crazy. Crazy. T square. That is capabilities, competence, risk of material misstatements, area of audit, and size and complexity of the. That is crazy. Very simple, very easy. Okay, hope you're finding it very. Next, planning an audit involves establishing the overall audit strategy for the engagement and developing an audit plan. Adequate planning benefits the audit of financial statements in several ways. Explain clearly those ways. That is what they have said here. Let's see one by one how it goes. First, they have said planning an audit involves establishing the overall audit strategy for the engagement and developing an audit plan. Adequate planning benefits the audit of financial statements in several ways, including the following. So this is there is a story behind it. There is a way you need to do this. First is that there is especially students who have learned from me that we have to do a diagram in relation to this point. Correct? That is, you give appropriate attention to important areas. Now within these important areas, you try to find the potential problem. Okay, so identify and resolve potential problem. Now to take care of the potential problems, you appoint engagement team member. Okay. Now the engagement team members have to be given direction and supervision by their leader. Okay, that is generally the partner who it is or the manager, whoever is there. So direction and supervision. After that, after we give the direction and supervision, they'll have to organize and manage their work. And finally, they have to work in coordination. To work in coordination with. So very simple. Planning helps us to identify the important areas. We also see the potential problems. We also identify and resolve potential problems. We also see potential problems there. Now, when we see potential problems, let's say that we appoint an engagement team member. Okay, just be in that flow. When we see an engagement team member, we give them direction, supervision. They will organize and manage their work, and finally, they will coordinate and submit us the required report. Okay, so that is in relation to that is what are the benefits of planning. What are the benefits of planning? Very clear, very simple. That is okay. Let's go to the next one. What could be considered material for all situations cannot be defined precisely. And an amount of transaction material, an amount of transaction material in one situation may not be a material in another situation. Now, see, if you're doing the audit of a small transaction of 5,000 also may be material. If you are doing an audit of a company, let's say called as Reliance or Infosys, maybe an amount of 1 lakh is also not material. Materiality is a very what you call it's something that changes from an organization to organization. Auditor just cannot say that no, I'll check materiality in this manner. He cannot do that. Auditor has to mold himself depending on the audit that he has got. Right? So here they have said this is in relation to SA 320. Materiality in planning and performing audit requires the auditor should consider materiality and its relationship with the audit risk while conducting audit. Here you'll see one more important line here. The auditor's preliminary assessment of materiality related to specific account balances and classes of transaction helps the auditor decide such questions as to what items to examine and whether to use sampling and analytical procedure. That is auditor when he does the knowledge of client business or when the auditor is testing the controls. And that time the auditor comes to know that okay, when I'm going to check, when I'm going to do the substantive audit procedures, at that time what kind of what amount should I keep above which I have to check. Okay, that is basically the auditor setting the materiality benchmark. Then you can see this example which I just gave here. Okay, of course you have the entire answer here, but I'm just giving you a gist of this answer. That is, for example, 5,000 may be material for a small entity, but even 1 lakh may not be material for a large entity. This is the exact example which is from the module I gave you. Okay, let's see the next one. That is audit documentation, audit evidence. That is chapter number, very important chapter. While doing audit of ABC Private Limited on the basis of sufficient appropriate evidence, auditor comes to a conclusion that use of going concern basis accounting is appropriate, but a material uncertainty exists. Discuss the implications of auditor's report if, and they've given here some areas. Adequate disclosure of material uncertainty is made in the financial statement. Adequate disclosure of material uncertainty is made in the financial statement. Second, as said, adequate disclosure of material uncertainty is not made in the financial statement. Now let's just analyze this situation. This matter deals with going concern and also SA 700 because in the format of the audit report you have something called as a going concern paragraph, correct? So what happens is when the going concern is affected of the entity, you have to see whether there is any material uncertainty. Okay. And if material uncertainty is there, then we'll see whether material uncertainty is affected and whether it is reported or not. If it is reported by the organization itself in the financial statement, then it means that we are dealing with honest people in the management who are saying that yes, in relation to going concern, there definitely is a material uncertainty, so they are honest about it. If the organization is honest about it, then the action that the auditor will do, I'll show A here. What action will the auditor do? Let's say they are disclosing it in the financial statement. Then the auditor will first give an unmodified opinion, because auditor will not give a modified opinion because he agrees with what the management has given. So auditor will give an unmodified audit opinion. That is a clean report, unmodified opinion. But along with that, the auditor will mention this in the going concern paragraph called as there is a material uncertainty in relation to going concern. So he'll give a disclosure of material uncertainty in the going concern paragraph. The going concern. That is what the auditor will do. Okay. Now, second case is where the company is not honest about it. That is, we are aware that there is any material uncertainty, but they are not disclosing in the financial statement. Now, if this happens, it's a big concern because it means that the company is hiding something. Okay. So if this happens, then the auditor will give something which will be in relation to a qualified opinion or an adverse opinion. Auditor will give one of the two. And if auditor gives this, then automatically the auditor will have to then disclose in the basis or modified opinion paragraph regarding why he has given this, and that reflects very bad on the entity. It shows that the auditor is dealing and gives a signal to the shareholders that see, management that you are having is a very dishonest man. Okay, so these are the two areas that we see. Okay, you can read this here, and whatever I explained, exactly that matter is here. I'll just show it to you. Adequate disclosure of material uncertainty is made in the financial statements. So here they have said that if adequate disclosure is made, then the auditor shall express an unmodified opinion, and the auditor's report shall include a separate section under the heading material uncertainty related to going concern. Very clear? Related to going concern matter. Then adequate disclosure of a material uncertainty is not made in the financial statement. That is, a disclosure is not made. In this case, the auditor will have to give a qualified opinion or adverse opinion. As you know, it is SA 705. And in the basis of qualified or adverse opinion section of the auditor's report, state that material uncertainty exists that make a significant doubt on the entity's ability to continue as a going concern, and that the financial statements do not adequately disclose this matter. That will send a message to the shareholder that see what financial statements you're reading. It can be bogus to some extent because they are not being truthful. What we can see, say as auditor, is that the company is not going to continue as a going, and we are raising a significant doubt about. So that is what we are seeing. Okay, I hope it is very, very clear to you. Like I've said here, give examples of financial events or conditions that individually or collectively may cause a significant doubt on the entity's ability to continue. Now, regarding these conditions or events, there are actually three types: that is financial conditions, operating conditions, and other conditions. Okay, but actually a big answer. But in this case, I've only asked in relation to financial conditions. Okay, regarding all these three parts, we sing a big song. Okay, so in this case, I'll sing a song for you, and you have to sing just a part of the song. Okay, because it is just the financial conditions. Here they have said the following are examples of financial events or conditions that individually or collectively may cause significant doubt on the entity's ability to continue as a going. Okay, so here they have said regarding these matters. What I'll do is I'll help you with the song. Okay, there is the famous Hindi song called as "Jeene ke hai char din." Okay, that is you live for only 4 days, so you enjoy life. It is in that tone. So if you're not aware with Hindi movies, don't be worried because we just need a song tune. Okay, so there is a song which goes like "Jeene ke hai char din, oh baki hai bekar din, oh जाए 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 एक बार जो जाए जवानी आ आए जवानी फिर आ आए. Okay, it is a song where you will not get your youth back, so enjoy now. It's all about that. Okay, now to my dear students in South India who may not understand every word that I'm saying in Hindi, don't worry, we don't want to learn the song. It is not required. It's not going to come in the exam for sure. Okay, but you need the tune. What is the tune? Na 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 it will go in this form. Okay, so how do you sing it? With how do you remember this part? There's an entire big answer. Huh? So what I'm doing is I'm just showing you a chunk of that, a piece of that, because they have just asked us financial events. Actually, this song is a very long song, which we continuously sing the same tune and cover the entire song. Okay, enter all the words. So let's go with this. Net liability or net current liability position, fixed term borrowing, approaching maturity, short term borrowings to finance long term assets, indication of withdrawal of financial support by the creditors, negative operating cash flows, adverse key financial ratios. Okay, you have to only look at the red underlined area. Okay, so let's see this. Net liability or net current liability position, fixed term borrowings, approaching maturity, short term borrowings to finance long term assets, indication of withdrawal of financial support by the creditors, negative operating cash flows, adverse key financial ratios. It goes in this. Okay, I hope it is helpful. I'm sure that you're learning this answer very nicely. This is the best way to, recollect the answer in the exam. Imagine you're singing an answer and writing it in the exam. That is the best way to score marks, correct? So, but you have to just revise, do it again and again. Sing it at home, sing it wherever you are, and before during the break in your studies, keep singing these songs. You're also learning an answer, plus you're relaxing also because you're singing. Okay. Let's look at the B part of the question, that is SA 560. Subsequent events deals with the auditor's responsibilities relating to subsequent events in an audit of financial statement. Financial statements may be affected by certain events that occur after the date of the financial statements. Many financial reporting frameworks specially refer to such events, explain those events, and also define subsequent events. So this is how it goes. So here they have said here, SA 560 subsequent events deals with the auditor's responsibilities relating to subsequent events in an audit of financial statements. Financial statements may be affected by certain events that occur after the date of the financial statements. Many financial reporting frameworks specifically refer to such events. Such financial reporting frameworks ordinarily identify two types of events. That is, one that gives an indication about the financial statements, about the conditions that existed, and the second, that the event that arose after the date of the financial statement. Okay, so evidence of condition that existed, and second, that arose after the date of the financial statements. So here the conditions were existing, so you need to adjust the financial statements. These arose after the date of the financial statement. Only need to give a disclosure regarding this. Okay. So here they have said, and this you can read later, that here the important area they have said, subsequent events refer to events occurring between the date of the financial statements and the date of the auditor's report, and facts that become known to the auditor after the date of the auditor's report, after the audit report is submitted. Okay. So they have mentioned in addition to this part. Just a second. So that is basically occurring between the date of the financial statement, that is 31st March, and the date of the auditor's report. Let's take it as 20th of August. Okay, so that is the date of the auditor's report. And facts that become known to the auditor after the date of the auditor's report. That is, after the date of the auditor's report means after 20th of August. Okay, that is what they have said in this case. And there are these four, cases that happen in this SA 560, that is subsequent events. And we have learned these four cases, and we have learned in our batch. Okay, let's see the next one. The auditor has a responsibility to perform audit procedures to identify, assess, and respond to the risk of material mistakes arising from entities' failure to appropriately account for related party relationships, transactions, or balances. During the audit, the auditor should maintain alertness for related party information while reviewing records and documents. He may inspect the records or documents that may provide information about related party relationships and transactions. Explain in detail with examples. They're talking about explain in detail with examples. Okay. Now let's see this. Now in this case, they've said that see, if you have to get information about related party transactions, you have to ensure that you are going through a lot of documentation so that you can find whether this related party transaction has occurred or not. So these examples are all in relation to that. You can see here, you have to see the entity's income tax returns. You have to see the information supplied to the entity's regulatory authorities. Okay. Then you have the shareholders register to identify the entity's principal shareholders. So you have to look at the shareholders register. There's statements of conflicts of interest from management and those charged with governance. So if there is any conflict of interest between, in relation to the management and those charged with governance, where they have set different views. Record of the entity's investment and those of its pension plans. We're looking at the entity's investment in this case. Contracts and agreement with key management or those charged with governance. Significant contracts and agreements not in the ordinary course of entity's business. Specific invoices and correspondences of the professional advisors of the entity in this point. Then you have the life insurance policy acquired by the entity, significant contracts renegotiated during the period of audit. Okay. Then you have internal auditors report. And finally, you have documents associated with the entity's filing with the securities regulator, that is basically SEBI. When you're filing a document with SEBI, that is the regulator that we see. That is basically when you file, which document do you file with SEBI? Generally, the prospectus, the prospectuses. Okay, that is what they have said here. Easy. So you have to remember this area. You can get a simple code. You can figure it out. It's called IC Doctors Life. And remember something called as IC Doctors. Okay. With I, you will get 4 points in this case. You can see this point number 1, point number 2, point number 3, 5 points. I'm sorry. Point number 4 and point number 5. Yes, we'll get 5 points in relation to I. Okay, then with C you have around 4 points. So you have here conflicts. Then you have contract. See, you have contracts with the key management personnel, contracts not in the ordinary course of business. You have to just remember this K also. You have to just remember this O also in relation to contracts. I'll show you how it flows. And then you have to remember this renegotiated during the period of audit. So if you stay with me, you can divide this C into 2 parts. One is in relation to conflict of interest. So that is okay. That is conflict of interest. And the second is in relation to contract. And to remember contracts, you can see something called as KOR. I'm writing it here because there is no space there. So K will be with the key management, then O will be ordinary course of business, and RE will be renegotiated during the period of audit. Okay, so that is how it flows. After that, you have D. D will be in relation to the document. So I've taken this documents associated with the filing of the security regulator. You can take whichever you want. So you can take document with security regulator, or you can take S there. Okay, but I prefer to take D, a document filed with the entity security regulator. With R, you will have in relation to, with R you have nothing because we have already taken it there. Okay. With R you have nothing. Generally, students also prefer taking this point as R. That is why that is a record of the entity's investment. Yes, that is why you can take R here, or you can take this I. You can take this investment as I, which we have already taken. With S, you have the shareholders registers. That point gets covered here. And finally, you have, this is also covered. This is also covered. This is also covered. And finally, you have the life insurance policies acquired by the entity. So you have doctor's life. With life, you have the life insurance. You have this nice code which will help you, and you have this C4 here. So remember that. You have IC doctor's life. You have IC doctor's life. Very clear, very simple. Okay, hopefully it is helpful. Next is chapter number 4, risk assessment and internal controls. Now, in this case, they've said there are significant risks, and then they have done just complete time pass. This is called ICS way of doing time pass. Okay, because they have just given some statement, which is of course relevant. But when you see the question is explain the factors to be considered by the auditor, exercising judgment as to which risks are significant. Now, even if they would have given just this statement, your answer would have been the same. But above paragraph doesn't change the way you have to write the below answer, because it is clearly given that you have to say factors which say that the risks are not just normal risks, they are significant. Okay. So here you have this answer. Okay. Now, how do you do it? I'll teach you a quick technique. Okay. Because I don't want to get into the teaching part here, because this is all about doing the RTP. If I get into the teaching part, then each answer will take 15-20 minutes and it will just extend the time. Okay. Now let's do this in a very quick manner, in a jiffy manner. So imagine somebody's at the door. So you suspect in the night, at 2 o'clock, somebody's at the door. So that somebody is going to do a fraud, and you don't expect this person to come. Okay. So you feel that it is out. It is not normal. Somebody ringing your bell at 3 o'clock in the night or 2 o'clock in the night. That is, you feel that it is in the ordinary. It is not in the ordinary course of business. Okay. So we'll say that it is outside the ordinary course of, outside the normal course of business. Okay. Then after that, what happens is when you see who is at the door, you see that one of your relatives from the village has come. Okay, he's an uncle. He has come from a far, he's a relative who has come from a native place. Okay, so he comes. We're like, hello, uncle, how are you? How come this time you are here? I see, my train got stuck, and I was supposed to pay just about 5 hours ago, but some train got stuck because of I got delayed because of in Mumbai. As I reached here, there was complete chaos on the roads and everything because I was not getting the transportation. And your house was the nearest. So I just thought I'll just walk here because you stay very close to the station. So I just walk here and I just come. I said, uncle, sure, please. So out of respect, we first, when we got up, we thought it is a fraud, some person who's going to do fraud, and it is clearly outside a normal course of business, correct? So after that, when we opened the door, we saw a relative standing there. So we have a related party. Okay. Now when we looked at a related party, then that uncle, he came home. I gave him a a glass of water and gave him an extra a pair of a shirt and a pant to wear in the night so that he can sleep properly because his clothes are wet because he had got drenched in the rain. So out of respect, I gave him all these areas. So I thought now the uncle will go and sleep. But the uncle started talking. Okay, he started saying about what happens in the village and all. And suddenly I'm like, Arey, now how should I listen to this? Because it is, already 3 in the night. I'm also sleepy. I have work on the next day. So out of respect, I just stand there and I'm just like sitting there and I'm just wondering, okay, how should I react? So I didn't know how should I react. So and I was very uncertain about what is to be done. But after that, automatically, my what he was saying automatically, because when you are sleepy, very sleepy, brain is just going here and there, but you cannot focus on what the person is saying. So you've seen that whatever he's saying is complex, very very complex. So what happens is automatically a yawn came from inside. Okay, you yawn like that. When you yawn like that uncle thought that okay, there is some that you need sleep. So he says, okay, Kartik, I'm very sorry, I'll allow you to sleep because tomorrow morning we can talk. Sure uncle, thank you. And he goes to sleep and I also go to sleep. Okay. So that is a recent, you can call it a recent event. Okay, recent activity or recent event. Recent is yawning is a recent event. No, okay, it just happened and he said that okay, good night. So that is recent event. So just remember in that manner. So this is point number 1, 2, 3, 4, 5, and 6. That is it. Your answer is done. Okay, very simple one. How do you do this answer? Very simple. Somebody knocks at the door, fraud. You feel it is not normal. So outside a normal course of business, you open the door, you see that there is a relative. He comes in and talks about different things. So you are very uncertain what you should do. So you're uncertain, and because you're sleeping, nothing is going on your mind. So you find every statement that he's saying as way to be very complex. And automatically a yawn comes out. You're like, what should I do? You're like yawning, yawning, yawning. So when you yawn, what happens is he realizes that, yahan pe, this guy is, very, very sleepy. What happens is that it becomes a recent activity. Okay, so he's just imagine that yawning as a recent event. Just connect it. Okay, so that you are able to remember the answer. Okay, so what risks are significant risk is basically, the relative story. Relative story. Okay, relative who comes home. Easy. Next, the risk of material misstatement may be greater for significant non-routine transactions arising from matters such as complex calculations. Or the risk of material misstatement may be greater for significant judgmental matters. So there can be risk can be greater for significant non-routine matters and significant judgmental matters. That is what they have said. Now they have written here, explain this matter. Okay. So now these are two separate answers which is there in your module. You can directly find it. It is greater, complex, non, or you can remember the greater, con. So greater, con. Okay, so greater, con is nothing but, or I think I'll give you the greater, coco. Just remember greater, coco. Very simple. Greater management intervention when management intervenes a lot. That is, it is also called as management override of controls. Greater manual intervention where some person who is not authorized may get access to the entries. Then you have complex transactions which are taking place. Okay, complex calculation, complex transactions. Okay. After that, you have that is it is difficult for the entity to implement effective controls. So you have greater coco. Okay, greater coco leads to greater for non-routine transactions. This becomes greater if there is greater coco. The risk of material misstatement becomes greater if there is greater coco. Okay. Next, you have risk of material misstatement greater for significant judgmental matters. Now, any place where there is different interpretations are involved. Let's say interpretations are different for in relation to accounting principles, the interpretation is different, or in relation to your judgmental matters, the interpretation is different. For example, your lot of judgment is involved. For example, RDD percentage, life of the asset, all these things, lot of judgment is involved. So wherever judgment involved is high or interpretation is high, the risk of material statement is greater for a significant judgmental. That is how you say it. Very simple, very helpful. Okay. Let's go to the next one. That is clearly the difference between the internal financial control and internal controls or financial reporting. This question is directly from the module, so you can just simply go through it. It is something that is straight. Okay, there is no explanation required in that. Even if I'll be doing it right now, I'll be just reading it with you. You can go through it. It is something that is important and it is a straightforward question. If such questions come in the exam, you should find it like where you should be very, very happy to solve it. Next is auditors reporting on internal financial control is a requirement specified in the Act and therefore will apply only in cases of reporting on financial statements prepared under the Act and reported under Section 140. Explain in detail, quoting specifically the law in the above context, covering each and every aspect what they have said here. That is basically they are given here internal financial control as per, this is point number A, and this is B, that is as per section number 143. 143, as you know, is the powers and duties of the auditor. Okay, that is here. They have said here that reporting on internal financial control will not be applicable with respect to interim financial statements, such as quarterly, half-yearly financial statements, unless such reporting is required under any other law or regulation. That is what they have clearly said. Reporting of an auditor in an audit of internal financial controls over financial reporting. The auditor's objective in an audit of internal financial controls over financial reporting is to express an opinion on the effectiveness of the company's internal financial controls over financial reporting. It is carried out along with the audit of the. Okay. Reporting under section 143, subsection 3, you have clause 1 in this case, and here they are given the area, and especially the most important area is the rule 8, sub-rule 5 clause. Here they have said this rule requires the board report of all the companies to state the details with respect of adequacy of internal financial control with reference to the financial statement. Adequacy, whether the controls are strong enough, whether the controls are good enough. The inclusion of the matters relating to internal financial controls in the director's responsibility statement (DRS), okay, that is what you see in 134, correct, is in 134 subsection 5 to be specific, is in addition to the requirement of the director stating that they have taken proper and sufficient care for the maintenance of the adequate accounting records in accordance with the provisions of the Act, for safeguarding the assets of the company, and for preventing and detecting fraud and any other irregularities. Okay, so that is what they have brought. Next is detection of manipulation of accounts with a view to presenting a false state of affairs is a task which requires great tact and intelligence. So they're admitting that doing a fraud also requires great tact, because generally management personnel in higher management cadre are associated with this type of fraud, and this is perpetrated in methodical way. Explain why such frauds are committed. Okay, so let's see this. So here they are given the points here. So let's see one area. It's very simple. Now let's say the company is doing window dressing. It means that the company is showing more profits than what it should. Company will generally do that so that they get the managerial personnel get higher remuneration, because in Companies Act there is a section called as section 197, based on which the managerial personnel get a certain percentage of the profits of the company. Okay, so that is called as higher remuneration. It's called higher remuneration. So basically, let's say that they can get up to the maximum is 11%. Okay, so 11% of the net profit they can get. So you can understand that 11% of net profit means the higher the net profit, the more remuneration they'll get. So they may be, inclined to show more profit just so that they get higher remuneration. Okay, that is one way of committing this type of fraud. Second is that they may show lesser profit. Okay, that is also possible. That is to avoid the incidence of income tax and other taxes. Okay, so to reduce the tax effect on the company, they may show lower profit. That is called as secret reserve. Okay. Third is they can fool the persons by declaring a dividend when there is insufficient profit. So you'll be like, sir, what is there in that? It will come to know. They'll come to know that the company is a fraudulent company. They are declaring the dividend. But when the company declares the dividend, what happens is the market then reacts positively to that company. Okay, the share price of the company increases. All these things. Next is without declaration of dividend, even when there is adequate profit, there is often this is often done to manipulate the values of shares in stock market to make it possible for selected persons to acquire shares at a lower cost. Okay, that is they will withhold the dividend, because of it there will be a negative sentiment regarding the company in the market. They will sell their shares, shareholders will sell their shares, the price of the shares will drop, and at that point of time, certain persons who are selected by the directors, they will then, or the chairman of the company, they will then take over the shares of the company at a lower price. So that is possible. So that is withhold the declaration of dividend even though the company has adequate profit. So it means that the company has sufficient profit, some company is capable of declaring dividend, but the company withholds it so that the price falls and people can then buy the share. Okay, that is your this area. Next, misappropriation of assets involves the theft of an entity's assets and is often perpetrated by employees in relatively small and immaterial amounts. They are given. Then they've written here misappropriation of assets can be accomplished in a variety of ways. Explain those particular ways. What are these ways? Very simple. I'll just explain to you in short. First is when the money comes in, you are taking a share out of the money. That is, you are embezzling the receipts. Second is when the money goes out, there is some kind of you're basically you're showing that you're spending a lot, but actually you're not spending that much. That is called as, this is it, that is causing an entity to pay for goods and services not received. So basically, the company is showing fake expenditure. Fake expenditure is generally shown to reduce the profit, because if you show fake expenditure, it will hit the profit and loss account debit side. The more expenses are there that are there on profit and loss account debit side, your profit figure will fall. And your profit figure is low, then of course you are successfully done something called as secret reserve. Okay, because you are trying to show worse picture of the company. So that you have to pay lesser tax maybe to the government. Okay. Next is assets can be stolen. Somebody can take the asset, so that can be stolen, or assets can be used for personal purpose. So I'm writing here personal. You can see you're stealing the physical assets or intellectual property of the company. And the second one is that is to use the assets for personal. Okay, very helpful, very easy. Next is audit in automated environment. Okay, straightforward answers. Okay, what I'll do with this is these are some areas which are straight from the module. Now these are some areas which are like direct from the module. I'll just show you what the question is. Otherwise, we'll be going overboard the time that have been allotted. So let's see this. The auditor should consider relevance of IT in an audit of financial statements. Explain giving reasons. That is, auditors should consider the relevance of IT in an audit of financial statements. That the IT is, of course, information technology in this case. So here they have said, since the auditor rely on the reports and information generated by IT systems, so the auditors rely on the reports. That is why they have said the audit should consider the relevance of IT in an audit. You should check the IT system very strongly because you rely on the reports generated by the IT system. If you don't check the system properly, you don't audit it properly, how will you ensure that the information that you are checking is correct? Second is standards on auditing SA 315 and SA 330, that is identify and assessing the risk of material misstatement through understanding the entity and its environment. SA 315. SA 330 is auditor's response to this risk. Okay, so these should be clearly seen by the auditor. And finally, by relying on the automated controls and using data analytics that is to check the information, use the information for various analytical purposes, see whether there is any chance of fraud that can occur because of analytical procedure. All these things. Okay. Next is how risks in IT systems, if not mitigated, could have an impact on the audit. So they have given three clear points: first, second, and third. They have said here, auditor may not be able to rely on the data obtained from the system. Auditor will not be able to rely on the automated controls, and because he's not relying on the automated controls, anything related to computers, that is calculations, you have accounting procedures, he will not be able to be confident about it. And next is due to regulatory requirements of auditors to report on internal financial controls. Regulatory requirements should be. So these are the 3 points that I have given. Next is in relation to audit sampling. So let's see. When designing an audit sample, the auditor shall consider the purpose of audit procedure and the characteristics of the population from which the sample will. Okay, so this is what they are given, and they have written here, explain in detail. So that is in relation to audit sampling, something that is again straight from the module. Okay. Now, what is audit sampling? If I just tell you that the population, let's say all the sales transaction of the company is called the population, and the auditor draws from that population, that is called as audit sample. So here they have said that you have to talk about the audit sample in relation to the characteristics of the population, and how will the auditor ensure that he takes the right sample for his audit work. Okay, so there are two approaches, that is non-statistical, statistical, they have been properly. Okay. Next area is in considering the characteristics of the population from which the sample will be drawn. The auditor will be determined that stratification or value-weighted selection technique. Stratification is dividing into groups. So if you have already divided a transaction into groups, for example, the company has transactions across 5 branches. So Mumbai, Delhi, Kolkata, Chennai, Bangalore. These are the 5 branches. So when they segregate a transaction in this manner, that is called as, that we'll say that stratification is done. Value-weighted selection is basically where the higher value transaction we are checking more. Okay, because we feel that if we get a fraud in these transactions or some error in these transactions, it will be more useful for the purpose of. Okay. Next chapter is analytical procedures. Very simple. For the purpose of essays, the term analytical procedure means evaluations of financial information through analysis of plausible, that is sensible or reasonable relationships among both financial and non-financial data. Explain giving examples of both. So that is in relation to this area. So this is the example that they've given here. That is elements of financial information and in relation to non-financial information. That is payroll cost to number of employees. Financial information can mean gross margin percentage. That is gross profit to sales ratio. Both are financial data. In the case of payroll cost or number of employees is a non-financial data. And here they have said whenever you are doing the comparisons, you can either look at the past and compare how I was then and what I am now, that kind of relation, that is prior periods. You can then check the future, that is what I want to be, and then you put benchmarks and then you keep comparing that. Okay, have I reached my goal? Have I reached my goal? That is anticipated results. And third is you stay at the present and look at your competitors. That is, you look at the industry information and see where you are going wrong. Okay, so this is what we are looking at. Okay, that is past, present, future. Okay. Analysis of computation of ratios includes the study of relationships between financial statements amounts. State commonly used ratios. You can use any ratio that you will be aware of, that is okay. But the five that they are given is simple, that is your income or loss as a percentage of sales, that is net profit to sales ratio, gross profit to sales ratio. Then you have gross profit turnover, that's so gross profit is here, so net profit will be here, or net loss to sales. And account receivable turnover, debtors turnover can also be given when you're considering this aspect. Inventory turnover is stock turnover ratio. And then finally, profitability, leverage, and liquidity. So ratios in relation to this. Then you have audit of items of FS. Regarding this chapter, we actually do 58 points song. Okay, 58 points. So whenever such questions are given where you have to vouch for these transactions, this is the best way to learn this 58 point song. So there are two songs which we learn. One song is of 28 points. The other song covers 30 points. And these songs are so good that you will be able to remember the points in such a way that you can write about 58 points in the exam. Of course, you don't have to write 58 points. I tell the student generally that you have to write 20 points in the exam. And if you're writing 20 points which are relevant to that matter, that'll be great. That'll be great. Okay. The songs that we do generally in the class are in relation to the Char Baj Gaye Lekin Party Abhi Baki Hai, which has a tune on disclosure depreciation, double entry documentation, discrepancy date occurrence, original observation, going concern gap complete, controls cut off transaction, confirmation, correspondences, changes client's business, resolution, representation, related parties, request reasonable, rights RBI direction, reconciliation, receipts revaluation. The second is in relation to this covered 28 points, and the next is in relation to there's a song called Sande Se Aate Hai from a very famous movie called Border. So it is from that movie. Okay, it goes like in this manner. Sounds authenticated, authorized accuracy, analytical procedures, agreement, adjustments, availability, accrual, audit procedures, minutes, payments, provisions, policy, skepticism, professional judgment, standard, security, segregation of duties, statutory dues, subsequent events, valuation, existence, evidence, ST, metality, TDS, test counts, title deeds, title deeds, title deeds. So these are two songs with which you can write in a very nice manner. So you can write the points in relation to all these areas. So it stops you from rote learning all these areas, and you can go for a practical approach, know all the points, and see what is applicable where, and then you can frame your answer in your own unique manner. So that is the positive of this part, where you don't need to study each and every, how to vouch and verify each and every area. Okay, so that these answers get covered in a very royal manner. Okay, now let's look at the next part, that is company audit. Now company audit, they have said in relation to business relationship, which is given in section 141 subsection 3. Now here they have said in relation to business relationship, we see company, associate company. So company, associate company, subsidiary company, holding company, subsidiary of such holding company, and subsidiary of the associate companies. You can see here we have company, associate company, subsidiary of such holding company, subsidiary or holding company, and subsidiary of such holding company, and subsidiary of such associate. Okay, so you have these areas covered here. And then they have said key what is not covered in business relationship and what is covered in that. Business relationship means basically if I'm the supplier, then I cannot be the auditor. It has that sense. But of course, if you're doing providing services which are professional services, or if you're doing transactions which are in the ordinary course of business, then these are not covered in this case. These are not covered in. Then the auditor can, of course, avail these services, even though he is the auditor of the company. For example, let's say they have given the example here of telecommunication. So if I am the auditor of Geo. Can't I use a Geo SIM card? I can use a Geo SIM. That is exactly the same thing. If it is in the ordinary course of business and I'm paying an arm's length price, I'm paying whatever the price the public pays normally, then I can, of course, be the customer of the company. Also, I can be the auditor of the company. Okay. Next is in relation to this area, that is the powers and duties of the auditor. A very easy answer. You can go through this, okay, and you can simply see how this. Then after that, you have in relation to Caro. Caro, you have something called as the fixed assets. So here there is a simple area that we do that is called PPTM. So what is PPTM, or you can do PPMT? It will be there for you. Okay, PPMT. PPMT is nothing but proper records. We'll be checking in relation to fixed assets. We'll physically verify the fixed assets. We'll see whether there are any material discrepancies in relation to fixed assets. And also in the end, we'll check the title. Okay, very, very clear. After that, you have the audit report part, that is key audit matters. Again, straightforward answer from key audit matters. Okay, even if I do it here, you will be like, sir, this is there in the textbook. There is nothing to analyze. Okay, just straight determine what are the key audit matters, and you have to talk about that. You can just go through this answer. It is in the module. Okay, now let's look at this answer. What is this? Gladful Limited is a company engaged in the production of smiley balls. During the financial year 2020-21, the company transferred its accounts to computerized system SAP from manual system of account. Since the employees of the company were not well versed with the SAP system, there were many errors in the accounting during the transition period. As such, statutory auditors of the company were not able to extract correct data and reports from the system. Such data was not available manually also. Further, the employees and the management of the company were not supportive in providing the requisite information to the audit team. The auditor believes that the possible effects of financial statements of undetected misstatements could be both material and pervasive. That the possible effects of the financial statement could be both material and pervasive clearly indicates towards disclaimer of opinion. Okay. Explain the kind of report that the statutory auditor of the company should issue. In this year, the auditor shall disclaim an opinion. Because there is a possible effects that the auditor has not reached the reasonable assurance level. The auditor is not sure about the company. Also, they have clearly said it is material and pervasive. When they use material and pervasive, and the auditor has not reached the reasonable assurance level, it is an indication that the auditor will give a disclaimer of opinion. Disclaimer of opinion, there is one more name for it, called as a no opinion. Okay, so that is the matter that they have said here. Okay, so they have clearly said the auditor should give a disclaimer. Next is bank audit. Again, something that is very easily given. So, your advantage of discussion in relation to the risk factors. In bank audit, you can simply go through it. It is directly given in this case. Then you have the audit of different types of entities. Again, a chapter which has strict consequences. The municipal expenditure here directly given again. So you can see municipal expenditure directly given in this case. So something that you can easily manage. This straight from the module. So this is not some kind of a case study which requires explanation. So I hope you're understanding where I'm coming. Okay, so all these answers that you can easily. Okay, I wish you all the very best. I was given a time period to complete it. I hope I have done justice in relation to your preparation. If there is any query, you can join our Telegram channel and you can let me know if you have if you require any help in. I wish you all the very best. Take care. See you.